How to avoid IRS underpayment penalties. Now that we've covered who may need quarterly estimated tax payments, let's talk about the question most businesses really care about: how to avoid IRS underpayment penalties. The key is understanding that the IRS isn't asking you to predict your taxes perfectly. Instead, there are several safe harbor rules designed to help taxpayers avoid penalties when they make sufficient payments throughout the year. Generally, you can avoid the penalty if one of these applies. You owe less than $1,000 after subtracting withholding and refundable credits. You've paid at least 90% of your current year's tax, or you've paid 100% of last year's tax, or 110% if your prior year's adjusted gross income exceeded certain IRS thresholds. For many businesses with unpredictable income, that third option is especially useful because it's based on a known number from the previous year's return, rather than trying to estimate the current year's profits. Estimated tax payments are typically made in 4 installments during the year. The standard due dates are April 15th, June 15th, September 15th, and January 15th of the following year. If a due date falls on a weekend or legal holiday, it moves to the next business day. Another important point is that these aren't simply 4 equal calendar quarters. The IRS divides the year into specific payment periods, so each deadline corresponds to a defined income period. If your income is highly seasonal, for example, if most of your revenue arrives later in the year, the IRS also provides an annualized income method that may reduce or eliminate penalties by matching payments more closely to when income was actually earned. One final thing to remember: underpayment penalties aren't fixed. The IRS calculates interest on underpayments, and those interest rates are reviewed and updated every quarter. That means the cost of paying too little or paying late can change over time. So, if there's one practical takeaway from this series, it's this: don't wait until tax season to think about your tax payments. Review your expected income regularly, understand whether estimated payments apply to you, and make sure you're paying enough throughout the year, not just when your annual return is due. Doing that can help you avoid unnecessary penalties, better manage cash flow, and make tax season much less stressful. Still have questions or want to learn more about doing business in the US? Head to Orbiss.com for more.